The Taiwanese index down 0.4%, Hang Seng down 0.1%.
Indian renewable energy company conspired to misrepresent the company's anti-bribery practices.
We need to sustain for that first above the 40-hourly exponential moving average, 23,727, 0.25% lower on the Nifty, 23,428.
This year should end with high single-digit growth or returns for Nifty.
We'll have to see as to whether there's possible for a settlement on that.
Could be another day where we would see some red, and it's a steep red that we're seeing across the board.
This can have ramifications for the entire Indian political system because we don't know who's on that list.
कारण है कि प्रधानमंत्री उनको प्रोटेक्ट कर रहे हैं.
A day of fall, but the mid-caps have recovered, at least staying flat in a weak market like this.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and it has been a tough day. And I think primarily the reason, number one reason, of course, has been, of course, the news flow related to Adani, which we kind of woke up to. This is Closing Bell. We'll track markets. We'll get your opinion and, of course, track, all the way into market closing. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, good afternoon. I reckon if it had not been for the Adani news flow, it would have been a much better session. It would have been probably even flat, maybe higher. I don't know, but I think that's the overwhelming kind of sort of overlay right now.
I've been just watching the day's low extremely carefully, and the good news was that so far we were well off it. So it was, you had the morning gap down and then you at least didn't break it. But I don't know. Don't want to say anything. 1 hour to go.
I'm taking heart from the fact that the mid-cap index is doing a relative outperformance. It's not just sell across the board. It is you want to pick stocks which you believe are attractive. So in that case, I'll take that positively. These are the first signs, I think, that there is some kind of selling exhaustion just in the near term. Because this piece of news is negative. It's impacted a lot of sectors, ripple effect on banks as well. But we're not seeing a big sell-off. The breadth of the market is not that bad as well. Currently you have closure around a stock that's declining for advancing for around 3 stocks that are declining. The Nifty Bank has recovered from the day's low. The mid-cap index at various points during the day was in the green as well. So I think today is not such a bad session. But as Prashant said, if it wasn't for this Adani piece of news that came out, it would have been a rather good one. The next big trigger, though, will be the state elections. We're looking for a domestic, trigger or something positive. It'll have to be this.
And for that, we'll have to get through tomorrow all the way into Saturday. That's the only problem. But, I mean, doesn't have to be a problem in that sense. Just a couple of points, and I'll put these levels out, the levels have not changed. I put these out in the morning as well. So, market lower on, of course, this Adani news flow. PSU banks are the top loser, and it's large PSBs. So, you look at Bank of Baroda, PNB, State Bank of India. This is sort of putting the pressure. Supports 23,300 to about 23,350 is the support, and we're basically around there as we speak at this point. And the Maharashtra elections, state elections, right? Results on Saturday. Exit polls are showing, of course, that the BJP and its allies will come to power. We discussed this on Tuesday when we did that political discussion. Little value markets will assign to what the exit polls throw up, and for good reason, with, of course, how they failed to predict the outcome in Haryana and earlier during the Lok Sabha polls as well. So results on Saturday, and if the exit polls indeed are correct, I think you probably get some more respite. And of course, all of this will also happen, as Nigel also said, towards what now seems like a little bit of, it seems like that $18 billion FIs have sold and basically 35 odd trading sessions, and you're coming to some sort of close to closing that out. So that's the sort of picture. And that would have been the backdrop this morning as well, had it not, of course, as I began by saying, this entire Adani-related news flow. Surabhi.
Absolutely. Sort of what's heartening is the fact that the Bank Nifty, which in the morning had suddenly collapsed 1.5%, has reduced those losses to about 0.5%, and it's actually doing much better than the Nifty now, so it's providing a fair amount of cushion to the fall. The other is the IT side of the market. The IT pack has been up right from the word go, and that is continuing even today. TCS, Infosys, there are some gains, about 0.5% on some of these counters. And then you have some of the metal and material stocks. They are doing not too bad in a market like this. Ultratech Cement, Grasim, Hindalco, these are names on the upside. And by the way, mind you that this is a performance in a very weak global context as well. Asian markets haven't had a great day. Europe is trading with cuts of about 0.25% to about 0.5%. Wall Street futures are not too enthused, kind of slightly lower. With the full throttle reaction to Nvidia all set to play out today. So the global backdrop is not, bull charge at all. It's fairly cautious. So in that context, and I mean, along with that, the Adani blow that our market had to deal with, maybe not that bad.
All right. When you're talking about metals and mining again, there are just two metals that I've been focusing on for the last many months, and I've been telling you all, alumina is in shortage and ferrochrome, chrome ore is in shortage, and Nalco is higher and IMFA is higher. Only two ways of playing it. They're not the final product, but because chrome ore is in shortage, that's why ferrochrome prices are holding steady, irrespective of what's happening in the globe. So IMFA is higher. And Nalco as well, periodically it's seeing those kind of intraday dips getting bought into. Yeah. So that's the other one as well that's holding up. And now you have the aluminium price as well that's moving up. So let's see how it goes. But for metals, I think when you know there's a bit of a shortage, there is some more cushion besides the global factors that play out. That said, how do you position yourself for the final hour of trade? Mitesh Thakkar is back with us. Mitesh, what do you make of today's trading session? We're very close to the lower end of the band. We were due for that bounce, we got it, but unfortunately it didn't last. What are the levels you're looking at on the downside, and give us your trading picks?
Good afternoon, Najim. So I think, one, I was looking at 23,400 when the day began, because the gift nifty wasn't so negative then, but then we had a very strong negative opening. Obviously, I think, I think Prashant, you highlighted that it was the Adani group which kind of made the sentiment slightly on the nervous side. So I think that's still playing out. And on the index, while the bank nifty also bounced back from the 200 average, it is not yet signaling any kind of a strong reversal. So we haven't, traded the index for the time being. We have some put option positions for the December expiry in the bank nifty, so it's a spread. It's not a clear short, but it's a good spread. So that is how we are approaching it. And on the stock side, I have a buy and a sell. Ultratech Cement, I think that was also, which was highlighted right now in the discussion. I think that's a stock which is showing the first signs of reversal. So that's a stock where I would want to attempt a buy with a stop below 10,840 for targets of 11,250, 300 to begin with. And other one is MFSL, which is a sell for me with the stop at about 11.95 for targets of 11.30.
Okay. All right. Got that. Mitesh, thanks very much. We'll come back to you for some more ideas. By the way, speaking of the Adani group, today's onslaught hasn't spared the Adani cement firms either. So if you're looking at ACC, Ambuja, all those stocks are down. But the others are actually seeing some buying. So Nigel, what do you make of it?
Well, the Adani group is under pressure today, but the street may choose to look at the group on a bottoms-up basis and maybe dip into stocks that have tangible assets with relatively better prospects. So let's focus on Adani cement stocks then. ACC as well as Ambuja. Both of them have corrected 30% from the recent peak. Now, the group has set out a plan to move towards 140 million tons of capacity, and they should be past the 100 million tons capacity mark by the end of this fiscal itself. That's taking into account the Orient Cement acquisition. Now, the management has stated that the expansion will be funded via internal accruals as well as the cash flows that they generate. The cash balance as well is strong. The balance sheet looks in very, very good shape. It's still holding at more than 10,000 crores. Now, while the industry has been facing headwinds, they have been making efforts at the company level with the premium products as a percentage of the total trade sales at around 26%. Now, that's higher from around 23% just a year or so ago. They have also set out on a cost-saving plan of around 500 rupees by 2028. They're looking at maximizing the share of captive coal and the group synergies, which help them lower the fuel cost in the first half of this fiscal as well. They're also targeting green power as a percentage of the total power consumption to move towards around 60%. That compares with around 20% as of now. They're also looking at optimizing logistic cost via higher sea transport and also use of their own rigs. That in turn will reduce and lower the fly ash cost. Valuations, well, they're far more palatable right now. For a large-size cement company, Ambuja Cements, it's trading at a big discount in comparison to Big Boy Ultratech Cement, while ACC is now trading at sub that replacement cost. So we have seen this play out in the past when there is negative news flow that comes in on the group, but some of these tangible assets get bought into and then in fact reward shareholders as well. Let's see whether it plays out at this point of time. Well, Deven Choksi is with us of DR Choksi FinServ. Hi, Deven. Good afternoon. Good to see you. When, we've discussed this in the past, I recall, maybe around 15, 18 months or so ago. Both ACC and Ambuja, both of them saw a sharp decline. Ambuja at that time went to I think 300 rupee odd mark as well. And from there it bounced. Both these two are tangible assets. You can see it. If you have to play the cement theme, you cannot exclude these. And also they have a path that they've drawn out for the next 4 to around 5 years. Do you believe valuations are good enough to go ahead and buy into these cement assets? Even in today's trading session, they have come off the low point of the day.
Yes, Nigel, good afternoon. I fully agree with your assessment. The entire business model of entire group of Adani is unchanged. Whatever we have seen, I think this is probably the third big attack which has happened on the stock price in the marketplace. And every time, I think whenever this kind of big attacks have happened, I think they've come out winner. They came out winner in the past. So all the more reason for believing that I think that things are working in that direction as far as the group and the stock price is concerned. Having said that part, I think in cement business too, I think most important aspect about these crucial assets that they have. On one side, they have got the entire fundamental in place, which is I think starting from your mining to the production. And on the other side, the logistic and the marketing, the completely comprehensive business model which is across the country through the port infrastructure. So in my viewpoint, I think the business remains absolutely robust for cement. In fact, they've shown the appetite to acquire the companies at a good valuations also. So from that perspective too, I believe that organic plus inorganic growth in the cement business, they should come out reasonably good, I think, in the coming 5-10 years' time, when India is going to expand significantly on building the infrastructure and keep spending money on that front.
Okay. Well, the Adani Group definitely making big headlines today. Devin, hi, good afternoon. Good to have you on. So I think in the whole onslaught, quite a few banking stocks were getting slammed down in the morning. Starting with SBI, stock was down almost 5%. So how would you look at State Bank of India? I mean, these could be opportunities to get in and buy as well. Or are you of the view that perhaps one needs to be a little cautious, particularly in terms of the tier 2, tier 3 lenders? I mean, there are all kinds of names there, including IndusInd Bank. I mean, it's a whole battery of Indian financial institutions that are lenders to Adani.
Well, yes, Surbi, good afternoon. I believe that I think market is reacting. It has a job to react for sure, I think. But the most important part is none of the banks and their businesses are under any kind of threat as far as the Adani Group is concerned. I think their repayment schedules are on track. Their cash collection in every business is on track. And that's what the banks would want, that whatever money they have lent, I think they are in a position to recover. The answer is yes. So from that perspective, I don't think that the verdict is changing any which way. From that particular point of view, one also wants to see that I think if these banks are coming down because of the sentiments currently, I don't think that I think it is fundamental. It is driven more by the sentiments. And that's where probably you get an opportunity to buy some of the good quality stuff from the market. In fact, I think this market in last 1.5 months, the amount of correction that we have seen, probably took time to went up and it came down in hurry. Maybe the price correction is so sharp that some of the long-term fundamental driven companies, large cap companies particularly, they look relatively more stronger than before as far as I think the portfolio appreciation prospects are concerned. Downside is remaining limited in my viewpoint. And that's where I see margin of safety also in that some of the cases, which was not available 2-3 months back. So certainly I would consider that I think opportunities around for some of the good quality stocks for buying into the portfolio.
No, absolutely. And point taken. Nigel, I was just wondering the other thing on cement, right?
Yeah.
Adani has been the most in terms of deal making, right up there.
Correct.
Right. Now you have been talking about how there are lots of these smaller cement companies, which perhaps may be in the play.
Yeah.
Now, if this were to linger on, some of these assets which were acquisition candidates. I mean, you suddenly are the Adani Group may take their foot off the pedal a little bit in terms of aggressively pursuing new acquisitions of smaller players. That is one. We don't know if they will do so, but that is perhaps one implication. The other is for companies like Ultratech, Shree Cements, which were not acquisition candidates, but they were feeling the heat because of Adani. I mean, that is the other kind of, collateral, not impact, but sort of takeaway in a positive way, actually, which perhaps could play out.
So I'll tell you how I look at it. When there was a problem with the Adani Group even 18 months or so ago, we thought like that as well. That the smaller companies that were in the market, they may not get bought into. We know what happened post that. Penna got folded up. You had Orient Cement as well got folded up, and they were not small size.
Correct.
The other factor is, now you're going to a dance, and there are two candidates, and both of them dance well. So one is dropping out. Ultratech is the other buyer in there. And I'm telling you, I have my ear to the ground on a lot of these deals. Both of them are in the fray. So it could be Ultratech. And Ultratech today is gaining. And Ultratech is standing head above everyone else. And when you have the Ambuja twins that go into this sort of a problem,
that's what I'm saying.
You'll turn to Ultratech. But Shree, I'm not too sure because, even the last time
we had the interaction and they've kind of not done.
I told them that
they spoke about organic growth, that how we are happy to pursue, build organically rather than buy expensive.
No, and they were telling us that we go ahead and we study. But I said that study only is happening. We're not converting it into the exam and passing through the exam.
There's another entity, the JSW Group.
Yes.
They're also active. And again, but that's the thing, right? Because the Ambuja ACC twins have been so active and so far ahead of everybody else in terms of at least inorganically acquiring assets. Some of the others, perhaps, as they take the foot on the pedal, maybe get a bit of a lift. We'll have to see.
Mr. Sajan Jindal said that come early 2025, in fact, we could play that bite in just a short while from now. I told Ritu yesterday, in early 2025, we'll see the IPO finally of JSW Cement. So for the time being, JSW Cement will have to take a breather if they're going to be coming out to that IPO, that is. So in that case, the biggest buyer in the market is the big dada, Ultratech Cement. Head over heels above everyone else, increasing capacity, doing some inorganic growth, focusing on reducing the cost of production per ton as well. And they've done a phenomenal job in there. I recall on the day that Adani Group went ahead and bought Ambuja as well as ACC, Ultratech was down. And from there, the stock has doubled. So let everyone re-rate or derate. The big guy is going to continue to do well. But this is going to be interesting. And just one factor for the cement companies before we wind down this conversation is, I want to see one price hike that comes about that sustains. Till now, that has not yet happened. For the last many, many months, and it's playing out, according to the script. Now it's Diwali, then it's winters, lack of labor.
It was
monsoons. It was monsoons. And quarter 4 last year was very, very weak. So in that case, that could provide the cushion. Because there was no price increase in quarter 4 and compared it to the previous quarter 4. So this time around, you get $10 off to the bar.
Yeah.
Well, let's
dance, and he's talking about the dance and who's dancing with whom, and both are good dancers. And in this one case, one of the dancers I think is now talking to the DJ and fixing other issues at the club.
I track the old economy. I track the old economy. I need to make it as spicy as ever. But in the last few days, you're seeing some of these companies like Dalmia, JK Cement. Periodically in the last 5 days, some of them done well because the hope is now the worst of pricing is behind, so prices will move up and input costs will cool off.
Numbers are free, etc. in Q2.
Yes, very
really crashed. Well, that's cement for you, but let's stick with that Adani story and look at it from another angle, right? Exposure, lender-wise. Ritu is here with details. Ritu.
Well, if we take a look at Adani Group's debt, as of FY24, its total debt stood at 2,41,000 crore rupees, which includes about 2.21 lakh crores in long-term debt, which makes up 92% of the total, and the rest in working capital debt. But the group continues to hold significant liquidity buffers with a cash balance of nearly 60,000 crores, which is about 25% of its total debt. Now, let's also look at where this debt comes from. Well, domestic Indian banks and financial institutions contribute the most, making up 36% of its total borrowing. That includes about 75,877 crores in long-term loans and 12,223 crores in working capital loans as of FY24. Global capital markets come next with 29% of the total borrowing, followed by global banks at 26%, and the rest comes from domestic capital markets and other sources. But if you break this down further, public sector banks have lent about 36,447 crores to the group across long-term and working capital debt, while private Private banks account for about 8,500 crores. Domestic financial institutions and NBFCs add another 43,000 odd crores, the bulk of which we know is from LIC. So individual lenders, LIC of course tops the list. SBI follows with about 27,000 crores of exposure. Axis Bank less than 9,000 crores to the group. Other major lenders include Punjab National Bank, REC, Bank of Baroda and IndusInd Bank. But keep in mind, there is no default yet. There is adequate liquidity buffers. So banks do not seem overtly concerned about Adani Group as things stand.
All right. Thank you very much, Ritu, for that. Appreciate it. So that's, of course, the lender's perspective. Devin, thank you very much for joining us. It's a pleasure. And apologies, we had a bit of a conversation here, and we'll chat again soon. Thank you. We take a quick commercial break here at this point, and we'll come back with more perspective, more on markets lined up in just a bit. Okay, welcome back. Just hitting the 3 p.m. mark now, 5 minutes to that. Shibani Sarkar Kuren is Senior EVP and Head of Equity Research at Kotak Mahindra Asset Management Company. She's with us to take some questions. Shibani, good afternoon. Prashant here. So, let's just not talk about Adani to begin with. We'll get to that maybe a little later. Let's talk about the market per se. Do you believe that we are, especially in the consumption side, things have, because we've got new data, especially for, how the first 10 days, 15 days, etc. of November have panned out, which doesn't seem like it's been all that bad. Basically, the second half of the festive season doesn't seem to be all that bad. Everybody looked at some, consumer staple results, etc. from second quarter and panicked a little bit that maybe consumption is coming off sharply. But since then, you've got, fuel sales data. You've got recently air passenger traffic growth data, which is, for one day hit, a humongous mark, the highest ever mark, and a few other things as well. What's your sense, Shivani?
So, hi, Prashant. Always good to be on your show. So, yes, consumer and the consumption data over the last maybe more than a quarter or so has been a mixed bag. As you rightly pointed out, the beginning of the festive season data was fairly muted, and then it picked up in the second half of the season. We started seeing data, especially in terms of two-wheeler sales, passenger vehicle sales, even some of the retail data, which seemed to suggest that the second half of the festive season was possibly better than the first half was. However, when you look at the consumer pack as a whole, there were two key divergent trends. One is that rural, which was lagging over the last few years, now seems to be seeing some signs of improvement. However, the improvement in the rural demand is a gradual improvement and not a very sharp recovery. On the other hand, if you look at anecdotal evidence, including the commentary that you've seen from some of the companies that have reported numbers, urban consumption, which was holding up fairly well, has started to see some slowdown, possibly some rub-off effect in terms of slowdown, in terms of credit, especially unsecured personal loan, credit card growth going into that segment. So that's something that we'll have to wait and watch out for. So the overall trends on the consumer side have been fairly mixed. Now we are in the midst of the wedding season. We'll have to see how this trend really pans out over the next few months and whether this improvement that you're seeing on the rural side also continues. Our belief is that at this point in time, rural appears to be better placed, and therefore segments which benefit from rural recovery should also be better placed within the consumer basket.
Yeah, I was actually looking at a report from ICRA, their business momentum index, which includes a lot of high-frequency numbers like auto sales, for instance. That has shown a 10% increase month on month, which is better than the same period last year. So October is good. They're saying November is actually even better, going by the early Vahan data. So let's see. Hopefully it'll play out that way. Shivani, great to have you on the show. But, it's been a roller coaster ride for the market, right? Out of nowhere, we are dealing with this incessant FPI selling. Have you made any tweaks to the overall sort of portfolios, any profit taking on some of your earlier sort of investments on the capex side, on things like infrastructure? Any changes over the last 4 or 5 weeks?
Yes, so absolutely, Survi. So, we keep evaluating our portfolios, looking at valuations, looking at incremental earnings growth trajectory, etc. So when you look at the markets, clearly the markets have been impacted by both external and internal factors. And within the internal space, last 2 quarters of earnings have been muted, and that's possibly also weighing on the markets. So the way we are looking at our portfolio is threefold. We are looking at quality over momentum. We are looking at companies where valuations are reasonable and attractive as compared to pockets where valuations are excessive. And we are also looking at companies where liquidity and free float is high. So these are the 3 key areas that we're looking at. Having said that, when you look at the headline market and the correction that we have seen, if you look at a stock level, the correction on a broader basis has possibly been even higher than what the headline suggests. So in that sort of a market, we are looking at bottom-up opportunities. From a sector perspective, we have taken up some profits in segments such as industrials, capital goods, and even automobiles over the last maybe quarter or so. And incrementally, if you look at our positioning in sectors, we have an overweight stance on technology. We also believe that the larger banks, specifically the larger private banks, are well placed in terms of valuation, and risk reward seems to be favorable. And therefore, these are some of the segments that we are evaluating. Even in the auto space, we will possibly look at more the rural as compared to urban, and therefore two-wheelers over passenger vehicles. And therefore, these are some of the sectoral calls that we have taken in the last quarter or so.
Hi, Shivani. Good afternoon. Good to see you in. What about defense? We have chatted about this the last couple of conversations as well. And you're on board that the opportunity is great. Now, these stocks have corrected from the top, both defense as well as railways. After this correction, do you think some of these stocks have come to levels that you would like to dip into?
So absolutely, Nigel. We have discussed this many a times in the past as well, where defense as an opportunity remains fairly large, both from a domestic opportunity as well as an export opportunity. So therefore, the structural thesis on the sector does not go away. The stocks have corrected. But remember, also the valuations were fairly elevated given the kind of sharp up move that we have seen in the sector over the last year and a half. And therefore, we are keeping a close watch on it. Possibly, we will, evaluate each of these companies on a bottom-up basis. The ordering that was gaining momentum over the last year or so has seen some degree of slowdown, and therefore the expectation is that maybe towards the second half, now the ordering should also start to pick up. In many cases, the order book itself is fairly large, and that should give some runway for growth. However, our overall evaluation within the defense space still remains very stock specific, and we do believe that while valuations have corrected, they still remain somewhat elevated, and therefore we will wait and watch.
Okay, all right. Just going back to the overweight stance on IT, Shivani, is that a play on the currency given the weakness in the rupee, or are you actually expecting better business momentum once the political environment clears up in the US with the elections behind us now?
So Survi, for us, IT as a sector has always been a play on business momentum. Our belief is that, even while currency may depreciate, if you look at over the last decade or so, currency has been depreciating, but margins have also come off in the sector. And therefore, the sector is very, very closely related to top line growth and revenue momentum. Now, for IT, there are a couple of things to look out for. Of course, we'll have to wait and see with the new president in the US coming in, what are some of the regulations and changes that they make, especially in terms of what they were talking about in terms of the corporate tax cuts, if that comes through. We'll also have to see what policies they adopt in terms of immigration, etc. However, what we are also seeing in IT is that after almost 2 years of low growth or companies deferring their spends on discretionary tech, a lot of that possibly is starting to come through, though it's still a trickle, and that's something that we will wait and watch for. And therefore, if that comes through, the revenue growth momentum is likely to improve going into next year. What we also believe is that, if you look at the sector per se, the structural opportunity in the sector remains fairly well intact. And it's a combination of both structural as well as near-term tactical play in terms of revenue growth momentum coming back, which has led to our overweight stance where IT is concerned.
Shivani, wanted to get to the piece on UPL, but how are you all placed on chemicals, specialty chemicals as well? There's a mixed feedback that we're getting, that things are not yet on the mend, while various companies suggest that from Q4 onwards, heading into FY26, they are hopeful that actually things will improve substantially.
So I don't know whether things will improve substantially, but this is a sector that has gone through a huge amount of headwind, both in terms of demand as well as pricing, with China clearly, coming into the fray. Now, it is possible that some amount of the impact that we have seen because of China dumping will possibly start to bottom out. However, the demand trajectory, especially where Europe is concerned, still does not give us confidence to see that there is a sharp recovery that is likely to be underway. Now, within the specialty chemical space, many of the companies have done capex, they have invested, and therefore they are well placed to benefit as and when the demand recovery happens. However, we will believe that it is still a few quarters away. The sector has seen sharp correction, and therefore stocks have come off considerably in terms of valuation. But whether the imminent recovery is likely in the next 1 quarter is difficult to say. It is possibly close to bottoming out, but will maybe take 1 or 2 quarters more for the recovery to play out.
Okay, all right, Shivani, we'll leave it there. Thank you very much for joining us. Appreciate it. And it's always good speaking with you here on CNBC-TV18. The JSW Group is targeting an IPO for its cement division by January 2025. That's the word coming in from the group chairman, Sajjan Jindal, in an exclusive conversation with my colleague Ritu Singh from the sidelines at the annual tech meeting of Indian Institute of Metals. He also spoke about Indian steel mills grappling with a higher influx of Chinese steel imports and the remedy. Listen in.
Over the years, I think, over the last many months, the industry has been discussing with the government, and government is very patiently looking at the whole situation. And they are very much aware that what is happening and looking at it, convincingly.
Is there any indication if they would consider imposing duties?
I don't think we are asking, the steel industry is asking for duties. Probably the steel industry is only asking that the Chinese steel, which is hugely overcapacity in their country, and every other country in the world has put tariffs on Chinese steel or other steels. So not to allow that steel come circumvented through other countries with whom we have FTAs and there is a zero duties, right? So that's the only request the industry is making, that the Chinese steel which is coming through other countries under zero duty, if that can be protected. That's about it.
If that were not to be done, for JSW, for instance, for the last 3 quarters, we've seen declining profit because of the pressure on prices, thanks to all of this dumping by countries like China. What do you think the impact will be on margins and, going ahead?
The last 2 quarters. So the margins will remain very thin, and what that does is that that won't leave a much surplus in the company to reinvest and to expand capacity. So the projects that we are planning to take, or the capacity that the industry is planning to build, probably will get shifted, will get delayed, and country will have to rely on imports. So that's the challenge.
I wonder, this is 4-wheelers, if in future you have any plans to enter the EV 2-wheeler segment?
No, we have no plans. No.
All right, a final word. We keep asking you if any more IPOs are lined up. Anything on the anvil in the near term, say next 2 to 3 years?
Oh, 2 to 3 years is a long time, but we have early next year as in 25, we will have IPO for our cement. JSW Cement probably would hit the IPO.
All right, and we look forward to that. Thank you very much, Mr. Jindal, for your time today.
Thank you.
Okay, all right. So that is Mr. Jindal talking about the ambitions and the plans going ahead with the cement business. Let's talk about some individual stock level action as well. And UPL, of course, has been catching the eye today. Now, Alpha Wave Global is all set to invest about $350 million to acquire a little over 12% stake in UPL's arm Advanta Enterprises. Stocks up about 1%, 1.5%. Sonal is joining in with more details on how this will unfold and how it could be beneficial for UPL itself. Sonal.
Well, UPL will be in focus because their subsidiary has received some money. It is via stake sale, 12.5% in Advanta seed business, where Alpha Wave Global will be investing $350 million to acquire that 12.5% stake. Remember, Advanta is the subsidiary of UPL, which has already received some money from other investors as well. The transaction is a combination of primary sale, where they will be receiving an investment of $100 million, and secondary share sale by UPL to the tune of $250 million in Advanta by UPL. The primary proceeds will be used in the business of Advanta seeds and for their inorganic and organic growth, and the secondary money will be used for deleveraging their balance sheet, something that UPL had been talking about for a long period of time. Now remember, this deal values Advanta at $2.8 billion, and when KKR had invested around $300 million, that valued Advanta EV at $2.25 billion. So there's a valuation upside that we are seeing with this deal. So going with green here. Also, the company has announced that they will be doing a rights issue to the tune of 377 crore rupees. This is at 360 rupees per share. It's lowered from that 4,200 crore rupees that they wanted to raise earlier. But yes, these two events positive for UPL. See some green tick on the stock today.
Well, indeed, stock is up close to around 2% or thereabouts. Well, time to slip in a short break. You come back. Mitesh is waiting for us. He'll give us a couple of buy and sell recommendations. Stay with us.
5 or 6 year period when I was at SoftBank, so much happened. SoftBank could have bought NVIDIA for $83 billion. Sounds like a lot of money, over $3 trillion today.
Your bullshit meter went off when you met Adam Newman, and you couldn't believe why Masa was willing to bet all of his money on WeWork.
Adam came along at a time when the major SoftBank commitments were made, at a time when Masa had a problem, which is, how am I going to put this amount of money to work? That's when the mistakes were made.
The book's called The Money Trap, and it's almost like the Hotel California-esque kind of feeling where you can check out whenever you want to, but you can never really
No, that's
leave.
exactly. People see that title and their reaction is, I immediately know what you mean. I'm in the money trap. And you need an extraordinary degree of conviction to break away. Money and power, people will do a lot of things. I mean, it's the oldest story in the world, right? So just be aware when the stakes are high, it's not for the faint-hearted.
Welcome back. Well, a couple of stocks actually have bounced off the low point of the day. Trend should come up for your screen. That one's seen a good bounce in the day's low. Apollo Hospitals as well is doing pretty okay in this sort of a market. But Mitesh is back with us. Mitesh, quick take on the index, as well as if you could fill us in with a couple of trading calls.
Nigel, I'll avoid the index. I still don't have a very clear directional sense on the index. But on the stock side, the Federal Bank is BTST for me. Disclaimer that I have positions over here, so there's vested interest. But BTST here with the stop at about 209 for targets of 214, 215. And Supriya Life Sciences is something which I would recommend as a buy. Keep a stop levels of 684 and look for targets of 750 here.
Very useful. Thank you very much, Mitesh, for that. And we'll come back to you for more. But, you know, let's just go back to the big story, which is, of course, the Adani news flow. And many of you, of course, would be wondering in terms of what is the road forward as far as the case and the indictments in the US are concerned. Remember, the issue at hand is the US Foreign Corrupt Practices Act, under which this sort of matter under which this indictment has been done. So my colleague Ashmit is now joining in, and he's compiled a list of, you know, in history, what are the companies which have kind of faced this act being applied to them, have been indicted, tried, and how they've sort of settled this monetarily. Ashmit, take it away.
Well, firstly, important to just establish the contours here that as far as Adani is concerned, they're facing charges on two fronts. One is by the Department of Justice. Those are the charges that the court has indicted them on. That's one. The other is, of course, the SEC. The SEC has also leveled charges against them, again on similar grounds of bribery. Now, when we look at this issue historically, there is precedent for settlements to have taken place. There are cases where large amounts of fine have been paid by avoiding guilt, and a settlement has been reached with both the DOJ as well as with the Department of Justice as well as with the SEC. Just to cite a few examples, it'll be relevant to cite that back in December of 2008 is when we'd seen Siemens. Siemens in that situation was charged with bribery in other countries such as Argentina, Venezuela, Bangladesh. It paid a total penalty of $800 million, but also importantly had pleaded guilty. Now that is way back when in 2008. More recently, in October of 2020, we saw one of the biggest settlements take place. Goldman Sachs, again charged with bribery with overseas governments, had to dole out $2.5 billion for settling those charges as far as bribery is concerned. With respect to India, this is a useful example. Oracle had also faced charges. In fact, it was facing charges of bribery here in India. That was a charge that had been leveled by not just the Department of Justice, but again, like in this case, in the SEC as well. And that is where they had paid a penalty of $23 million. An important caveat however, is that the settlement with one of the two, Oracle had settled with the SEC. Settlement with one of the two, SEC, does not automatically mean that the other case goes away. So that is something that Adani and their legal counsels will also have to bear in mind. Another useful example is the SAP. SAP also faced charges. They paid fines of up to $220 million. Importantly, they did not admit guilt. They entered into what was called a deferred prosecution agreement. But here's the catch. The catch is that these DPAs, or these deferred prosecution agreements with the Department of Justice, are usually arrived at before the court indicts them. In this case, the court has already indicted them. So that DPA route may be shut to Adani as far as the Department of Justice is concerned. They can still, of course, explore their settlement options with the SEC. And mind you, this is one aspect that the Department of Justice, especially under the Biden rule, has been touting, that for settling these commercial disputes, settling these corporate disputes, they are open to settlement agreements without the admission of guilt. So there is precedent where such charges have been leveled by the SEC, by the Department of Justice, and there are precedents for settling these disputes. Of course, it varies. The contours vary on a case-to-case basis. What are the exact situations that will be applicable to Adani in this case is something that they'll be have to discuss in great detail with their respective legal teams. Back to you.
Ashmit, thank you very much for that. Lots of information and very useful perspective as well. Some of the nuances in terms of individual cases, which Ashmit outlined as well. So, you know, that's one way to go, but there are important differences even as you look at each of these individual cases and say, well, all of them were sort of settled on a monetary basis with or without admitting guilt. There are differences and nuances which Ashmit alluded to with many of them. We'll take a quick commercial break here. We're going to come back with more market conversation on the other side. Ambarish Baliga should be with us when we return. Stay with us.
Welcome back. So just about 5 minutes to go, and we have Ambarish Baliga with us to take us through the final stretch. Ambarish, it's been quite a day watching the events unfold. But let's talk about what you're buying, because you still have something on your list. So tell us more about the stock.
I mean, I would say that after the sort of fall which I've seen, I think it's time to slowly start buying. Like I told you earlier, I was about 40-45% in cash, out of which I'm just deploying about 5 to 8% at these levels. And one of my picks currently is Granules, which is a vertically integrated pharma company, a leading manufacturer of active pharma ingredients, which is APIs and formulation intermediates, as well as finished dosages. And they supply their products to across about 80 countries. And it's also a leader in the field of CRAMS, contract research and manufacturing services. They are, across various therapeutic areas like pain management, cardiovascular diseases, diabetes, as well as respiratory condition, and a strong track record of innovation and quality. The company has invested heavily into R&D. However, Q2 earnings were impacted, and they were lower than estimates due to that voluntary shutdown of Gagillapur facility, though formulation margins were in fact better. Going ahead, clearly, the company's growth is expected to be fueled by new product launches from its GPI site in US, as well as the growing finished dosages sales in Europe. In fact, the US FDA inspection, which was in early September, resulted in 6 Form 483 observations, when the company went for voluntary stoppage of manufacturing and distribution of those products. But now it's back in a phased manner and should be in full capacity soon. But then when this had happened, the stock had corrected. Then you had the Q2 earnings, again the stock corrected. So at these levels, I think the valuations are very decent. And going ahead, you have the new formulation facility at the Genome Valley. That's progressing quite well, and that should be in market by Q4 FY25. So I'm expecting an EPS of about 27 for FY26, and this would result in a price target of about 675, which is a decent return from the current levels.
Okay, all right. Positive on granules. Last 3 months, it's seen some selling pressure. Amrish believes it's a good time to get in. Amrish, you're talking about valuations as well. We had some news flow on the screen that Ola Electric is trying to get its house in order. They're looking at, cutting cost and, trying to recover out there. One would say that maybe it's, they're in a very tight spot, so that's why they're forced to do this. But, the issue was $70, went to around 140 rupees. The stock flew away, but now it's at 67. You're interested at 67 or stay away?
No, see, at the issue price, I think it was decently priced, not too expensive, neither too cheap. So I was quite surprised when it went to those levels of closer to 150, which was just a bit too high. But then I think there was a lot of excitement at that point of time. But post that, with the sort of news flows which happened, because of the servicing issues which they had. But then one should always remember that, servicing issues we're talking of, yes, I think servicing issues clearly are there. But I think it was blown out of proportion to a certain extent, I think, because if that was really the case, you would have seen their sales falling, which is not the case. In fact, they've been able to increase their market share. Which clearly shows that, yes, I think that, they are trying to put their, house in order. And at the current levels, I think it's decently priced. So I don't see much of a downside from here. End of the day, they're leaders in that space. So I think at current levels, one should be buying. Maybe there can be a downside based on the market. There can be a downside of either 5 to 10% from there, but that's the risk one has to take.
Okay, all right, fair point. Got that. Amrish, we'll come back to you after the markets close for markets forward, but right now I need to look at the final rates. Because the story of the day really is the Nifty has managed to protect its lows, thanks in a large part to the recovery on the bank Nifty, but it's still a down day. There's no other way of putting it. About 0.7% lower, and that's a cut of over 160 points on the index. Let's start with looking at all the Adani stocks and as the final rates kick in. Adani Enterprises about 23-24% lower. Adani Energy Solutions green, they're down about 20% each. Adani Ports is losing about 13 to 14%. And, stocks like Adani Wilmar, Ambuja Cement, ACC, all of them down between 8 to 10, 11%, depending on which stock you're looking at. So that's the Adani story. Beyond the Adani story, on the Nifty, the weakness came in the form of a lot of PSU names, SBI, NTPC, ONGC, BPCL, a lot of these names on the way down. And then there were the likes of Reliance, which was weak. There was, Britannia from the FMCG space, Asian Paints from the FMCG space. So this brings out the list of the weak names.
Well, there were some good winners as well. You had Kiri Industries that was up 11% in trade. Sterling Tools up more than 10% in trade. Tourism Finance up 9%. You should get some of these stocks up for you on the screen. Strides Pharma, 7.5% higher. VIP Industries hopes that business will turn around, hopes that maybe the promoter as well